Welcome to another exciting edition of the Trading Bell. Today we are coming to you from the Nairobi Central Business District, the headquarters of Family Bank, one of the major banks in the country. And we'll be speaking to Rebecca Mbithi, who is the Managing Director as well as the Chief Executive Officer of the bank. She'll be giving us a sense of where the bank is headed in regards to growth, as well as what has been the scenario like when it comes to coping during a pandemic year. Before we get into that discussion, let's take a look at her profile.
Rebecca holds an MBA with a concentration in strategic management from USIU and an LLB degree from the University of Nairobi. She is a CPA and a member of the Institute of Certified Public Accountants of Kenya, a certified secretary, and a member of the Institute of Certified Secretaries, an advocate of the High Court of Kenya, and a member of the Law Society of Kenya. In addition, she is a certified executive coach. She joined Family Bank in January 2015, taking on the role of Company Secretary and Director, Legal Affairs. Rebecca was appointed CEO of Family Bank in February 2019. She is a seasoned professional and a respected lawyer with an extensive leadership background in various organizations, having previously worked at Kenya Tea Development Agencies, where she served as Head of Legal and Regulatory Affairs, and Rift Valley Railways, where she served as Company Secretary and Legal Counsel. She has vast domain expertise and knowledge in law, project finance, corporate restructuring, equity debt raising and governance, and has served in the Corporate Governance and Standards Committee in the Institute of Certified Public Secretaries, Kenya.
Thank you so much, Madam Rebecca Mbithi, for hosting us, and such a pleasure to have you on the show.
You're welcome. Welcome, Abby.
All right.
Yes.
First time to have you on the program, of course. I know you're a very athletic person. Over and above that, you are one of the few women that is charting and charted paths in the financial sector in Kenya. I'd like just to begin by getting a sense of where we are as a country when you look at the financial sector, and of course as a bank. Is banking still profitable?
Well, a good question as to where we are as an industry. I think banking over the years has seemed to be one, and has actually been one of the profitable enterprises we've had, contributing significantly even in our Nairobi Stock Exchange in terms of market capitalization. So it has been a good run for the banks with a few challenges here and there. However, of course, like every business, the banking sector has hit a few headwinds, and significant headwinds I would think about are currently the pandemic that we are going through, which came to be last year around March, with the first case being announced in Kenya. So that's been a major headwind for the banking sector.
All right.
And obviously with it, because we are in an economy, we serve customers who are affected by whatever is in the macro environment, the pandemic. As a banking sector, definitely we have had to go back to the drawing board as businesses and see how we emerge from this particular challenge. We took an industry position as a bank, as Kenya Bankers Association, supported by our governor, on the various areas we would need to do just to come into play as a sector, just to support Kenyans. The 2-3 that come to mind is, first and foremost, we realized that a lot of the businesses, a lot of the small, big businesses would be affected by the pandemic. And as the lender of a lot of these institutions, then the question of their ability to repay their facilities based on the reduced business activities, the lockdowns that we witnessed, was something we had to really look at the solution for it. Obviously, being players in society, we had to be understanding. So we had to create a mechanism of supporting businesses, and this was through the industry position where we agreed we would be restructuring facilities for businesses that were hard hit by COVID, and that we did pretty well. Family Bank also was not left behind. We're looking at approximately 25% of the loan book we held at that particular time, a largely predominant SME loan book being affected. And we also stepped in, restructured facilities to the tune of around 16 billion. The other thing we realized with the pandemic, we would need to change the way then we, as a public, we handle payments. So with lockdowns, with a potential warning that cash handling was one of the major gray areas in transmission of COVID. So we all came as an industry, agreed then to perhaps move a lot of the transactions to digital. You recall that we did zero rate a lot of the transactions just to make sure that the public handling of cash was limited. So that some of those are in summary some of the challenges, some of the initiatives we had. Some of them are still continuing up to date, despite the situation easing. All of us getting a better understanding. Businesses now fully back, some sectors fully recovered, others still struggling. But I think all in all, the banking sector at least now has a good understanding of the pandemic. We've been able to know how to support the public, the businesses, and I feel we are coping better than we did at the start. And we've also seen new ways emerging of doing business. We've not been left behind, so everybody moving digitally. Family Bank being one of those that have really invested in the digital era. Actually, recently, our customers voting us pretty well in the market on digital and customer responsiveness. So I would say that those are some of the things then as an industry and the challenge and how we've been able to overcome the challenges that have been presented by COVID.
Quite extensive opening remarks there, Madam Mbithi. And I'm curious to find out, of course, banks were able to readjust the loans for customers. At the same time, how significant did the pandemic impact on your books? When you look at majority of the banks that are listed, if not close to 10% of institutions in Kenya reported profit warnings, signaling a turbulent year for not only the banks, but generally the economy at large. As a bank, how significant were you dented by the pandemic?
We were dented, we were not left out in terms of the impact of the pandemic. I did allude to almost restructuring 25% of our book. Family Bank predominantly does finance the SME market. 60% of our loan book is to the SMEs. So this was a sector that was hard hit. Predominantly because COVID did come in and cut a bit of the supply chain that we were looking at. A majority of our customers do tend to import some of their machinery, raw materials from some of the countries such as China, India. So with that supply being cut, government of course stopping some imports in key areas, especially for the micro space. The traders in some markets like Gikomba, where we have 2-3 branches, would see that them being impacted. But the good story around Family Bank, and perhaps why we did not see a huge impact despite the restructures, is that we quickly, as a team, as a board and management, went back to the drawing board. Because in the midst of challenges, you really do have to reevaluate your strategy. What is it? The opportunities still, despite a very hard period, you can see in the midst of the challenge. So we saw the opportunity. Our customers, as I alluded, the SMEs, the corporates, came to us and said, you know what, times are tough, but we've seen opportunities. We are in thriving sectors. Are you able to support us? So amidst the pandemic, Family Bank continued to lend to its customers. In fact, we witnessed a growth of almost 11% in our loan book to sectors that were thriving. And when I talk about this, I think there was quite a bit of opportunity in the market. We saw agribusiness space thrive. we saw some components of logistics, manufacturing thrive, and actually even the medical practice, we saw quite a lot of appetite, and we were able to support those sectors. So this shielded the adverse effect we would have otherwise experienced.
Sure.
So we managed to cushion ourselves against that, despite the sharp increases in the level of provisions for bad debts.
I was actually coming to that.
Exactly. So you've seen the industry actually witnessing a spike in the provisions for bad debts. Family Bank also witnessed our bad debts year on year, comparing 2019 to 2020, grow by 2.5 times, which is pretty significant.
Sure.
So this did dent, obviously, our position, our profit position, but then nevertheless, because of the growth that we witnessed in the loan book, in the loan fee income, we were able to still record at least just a 2% decline in profitability from our 2019 position.
Right.
Yeah.
And very moving sentiments there. Of course, the road to recovery is still bumpy, but resilience will help the financial services sector to overcome this. I'd like to hear your thoughts around where does the future lie in banking, especially now that many of the institutions had to reevaluate their strategies, and we're moving away from the brick and mortar. The new space for consumers is the mobile phone.
Yeah, you're absolutely right. And as I said, these are some of the opportunities that came and some of the realizations and lessons around the new way of doing business, and that was digital. So I think every bank in Kenya, also Family Bank, we've really had to invest heavily on digital. But why that was also a blessing is because it also helped us create efficiencies within our operating models. So perhaps the cost of service on a digital platform is less than that on a brick and mortar. So what it does, as we've all invested in the digital platforms, it's freed up a lot of our capacity. So what does that capacity mean for us? It also is good news to the customer, because then it allows us to be more customer centric.
Sure.
So what I will note is that during this difficult time, you actually need customer responsiveness. What has also helped Family Bank in getting a lot of its customers back on track despite the pandemic is the relationship management model. So we've been able to walk through our customers just to understand what is happening in their business, their turnaround program. And a lot of them with our support, some technical support advice, some access to credit, we've been able to see them recover. But what does that mean? That means you've got to apply resources to manage that relationship, and also make sure you're more responsive to your needs, because the needs are not going to be the needs of yesterday. The needs are also evolving in the midst of all that we are going through. Maybe trade finance is the way to go instead of then most of what we used to see previously, which is perhaps real investment infrastructure and all that. So there are, as I said, there is definitely a change in all our operating models as banks, and we will all continue to then invest then in the digital space because of all the opportunities, and also the customer has seen the benefits of convenience that comes from the digital space. So I hardly believe that there's any customer who will be going backwards, because today convenience, as you've said, is on your phone.
Sure.
Saves you time, money, and also makes it easier for you to be able to transact and improves your overall customer experience.
I'd like to know what was going through your mind when you kept seeing announcements by the government in regards to the pandemic. Majority of business leaders believed that this was going to last 3 months. It's taken us over a year. We are still trying to mitigate against the pandemic. For consumers, those are the customers of the banks, and of course the small businesses. How is the bank positioning itself in regards to serving their needs, supporting business continuity? Because no one anticipated this pandemic would last this long.
You are spot on when you say that we all actually personally thought that this was something that was going to be with us for a very short time. Then there was also a lot of fear because we didn't have a lot of information about the disease. There was all this misinformation. But as we started to get more information coming in from WHO, coming in from government, I think we all now have a better understanding of the pandemic. There's been a look at how typically pandemics last. And it makes it easier because then you've got to take a long-term approach to everything that you're doing. So even though we had thought that it would be a quick fix for our customers, 2-3 months, they are back on track, we've had to then sustain the initiatives we had with them in terms of support, a lot of patience, in terms of that this might not be a quick turnaround story, but however, moving gradually with a lot of them. Some of our customers started out with perhaps a situation where they could absolutely not meet their basic principal interest. Some, through working with them, supporting them, they've now been able to move to a position where they are servicing interest, some servicing part of the loan. So you're able to move with them. And good thing as also the government and all the stakeholders try to then address the whole impact of COVID with the restriction measures. We've seen the restriction measures being less, the restrictive measures being less onerous. Some sectors are able to open up, critical sectors. Surprisingly, one of the critical sectors that was hard hit but now is coming back is the schools and institutions. So we are happy with the measures, the way they are being eased and how we are seeing this translating into the opening of the economy, while at the same time then keeping Kenyans safe. So it's basically taking a long-term view and also encouraging our customers, the same way we did as a bank, to look at new opportunities, way of surviving, new business lines. So basically working at the long journey with them instead of taking a very short-term view of the pandemic.
All right.
Yeah.
And what I've gathered is some very difficult and eye-opening lessons from the pandemic, from business leaders realizing that it's a question of how do you quickly respond? At the same time, how do you ensure your plans are long-term? This takes me to my next question, of course. As a bank, I know there's been a lot of talk around planning to list at the stock exchange. And being privileged to have you on the show, it will be great to hear. How are we progressing with this? What impact do you feel it will have on the bank in regards to opening it up to the public?
Okay. So thank you. Family Bank is no stranger to the NSE. We've been listed there under the fixed securities market. We had a listed bond that we actually redeemed in April. It was a 5-year, 5-month corporate bond, a successful issuance back in 2016. So it is a market which we have seen has a lot of opportunity as a way of investment, as a way of raising capital, debts, specifically to support our very aggressive growth strategy as Family Bank. I think Family Bank is one of the local indigenous banks that has a good story to tell of financial inclusion over the years. A lot of Kenyans I've met have benefited from Family Bank being a bank that invests in them to just be able to grow their businesses. So it's a good story. We've gotten a lot of demand. Then can you list perhaps your shares in the NSE? And it is something that the board and management of Family Bank has been considering. And yes, I can say at the opportune time, as Family Bank, we will be looking at listing in the NSE. So yes, please do watch out for that in future.
All right.
Yes.
How soon? How short is the future?
So we will continue to just explore how the market looks at. Like, obviously, currently, in all fairness, we're in the middle of a pandemic, so it might not be the opportune time. But definitely, once the market stabilizes, the macros are good, definitely this is something that Family Bank will be looking at.
Excellent.
So it might not be in the too far future.
All right.
Yes.
We'll be hopefully here to witness that.
Yes, yes.
And as we come to the tail end of our discussion, Madam Mbithi, we'd also want you to speak to the girl child.
Mm-hmm.
Of course, it's very rare to find banks and, of course, the executive caliber of staff being well balanced off in regards to having ladies in positions of influence. Perhaps, how has the journey been, and what would you like to share in regards to how you broke the glass ceiling?
Thank you very much. So what I would say is that I believe that a lot of work has gone into just making sure that women have equal opportunity. And in Kenya, we've seen the history of a lot of initiatives, very strong women in our past who've done a lot to make sure that we have these opportunities available for us. So we are people, I would pride myself as one of the people who have benefited from all those initiatives we saw back in the 1980s. So there's a level playing field as much as possible in most areas in Kenya around education. Most of the employers now, thanks to laws and all those initiatives, are equal opportunity employers. So a lot has happened. So for me, I think it's for the girl child to just take advantage of those opportunities that have been created for us, because we owe it to all the people who've gone before us and really fought for these rights. And for us to take advantage, it's simply, I would say, a product of our hard work. A lot can be done, but ultimately it is the hard work that counts. When you're getting to these levels that we're looking at, where you're a director, where you're a CEO, where you're executive management, I think what now starts to count is merit, because all this, there's only as much as affirmative action can help you. You've got to get there by your own merit. So when you have an opportunity, seize the opportunity, do the best you can, prove yourself that you are the right candidate for this particular job. So if you know, and if you have that discipline of meritocracy, I think you will get there. It's not something that anybody will really prevent you from getting there. But mine is just also to continue to say, we're not there yet. A lot still can be done to create equal opportunities. So each and every one of us, I know we had the Women's Day the other day, and it was all talking about continuing with the men, the women, just continuing to create equal opportunity. So we all need to just continue coming together to create these equal opportunities. There are areas that women are still marginalized, so it's not yet over. So some of us, when we have an opportunity to create that level playing field, we do that. So if we all continue to do that, we can see a lot more women then get into these offices, even as they do their part in terms of building meritocracy.
All right.
Yep.
And your parting shot, strong institutions outlive office bearers. As a bank, what are some of the key values in regards to governance? And what's your take really on corporate governance in Kenya, especially in the financial services sector?
Especially for the banking sector, governance is very critical. I think it can make or, not I think, it can make or break an institution. And these are lessons we've learned over the years. I think the banking sector from the 80s has gone through a lot of ups and downs. And the banks that have survived are those that are founded on strong governance principles. Family Bank is one of those banks. I think we have a very, very strong board and management. We have board that has very experienced, led by our chairman, Dr. Wilfred Kiboro. We've got excellent board members who are specialists in their own particular areas. Then there's a very strong management team, which I lead. So that strong governance structure just ensures succession ensures that an organization is well run. Banking is purely built on confidence and integrity. So with those, then a bank, I can say that there's nothing that really can stop your plans once you've got governance, integrity, and succession planning in place. So I would encourage all institutions, including, and this is a conversation we have within our SME customers, that it's very important to build those governance processes. However small you are, please have a distinction between board and management, have a capable board in place, have controls in place, arm's length dealings in all the transactions that you do, and you will see that actually it's one of the ways you can even be more successful than you, more successful than you envisaged, by purely having proper governance structures.
Excellent place to end it. Thank you so much, Madam Rebecca Mbithi.
All right, thank you, and you're welcome.
All right, we've been speaking there to the Managing Director and CEO of Family Bank, giving us some insights into how the banking sector performed and what she sees in the horizon when it comes to expansion. That's where we wrap it up on this week's edition of the Trading Bell. Until next time, keep safe and continue sanitizing, and of course, don't forget to social distance.